Hello again, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 9th of June 2023. First chart is the US dollar index futures. We'll put some lines in so you can see where we are. Here's previously where price was moving higher, and this was the highs of the range. You can see supply was drawn out on this bar here, and there was a 2-bar combination here where supply was obviously drawn out again. Price moved back in response, attempted to push higher but failed, and then price broke down. We were in a downtrend then. You can see price moved down for a period of time, and more recently through here in particular, we noted on these weekly updates the market was finding support down here. It wasn't accumulation so much as buying support coming in. The market could easily have moved lower here. It didn't move lower, and in response, you can see that it started to move higher again. And here was the first little breakout, mini breakout above the zone. There was a little shelf through here, which this bar caught, and price then accelerated up to the highs of the range, which sort of coincides with this level as well, really. You can see prices moved up to this level. There was always going to be supply drawn out to the left if price challenged. And in response, the market has moved into absorption mode. It's consolidating the recent gains through here, and it's absorbing supply, potentially in preparation for a push higher. We'll just wait and see. If supply becomes overwhelming, you'll probably see price pushed back down again. Probably back to, at least initially, back to this 102 level, somewhere around there, which is the highs in here. There may be an attempt to support the market through here, sort of in this level. But in the meantime, price is attempting to absorb the supply being drawn out. And you can see down here in the volume, we're below average at the moment. So there's not a great deal of supply being drawn out. So the market's just consolidating sideways, and we'll just see, given favourable trading conditions, you may see price challenge the highs of this range around the 104 level and attempt to move higher. If not, you may see price just moving sideways for a period with no real intent to move higher and no reason to move lower. So we'll just leave that one as an open book at the moment and watch as price unfolds. Next chart is the E-mini S&P. Here's the highs of the range in here. We've noted through here a lot of absorption has taken place, and 2 weeks ago price broke out above this level, and this week there was a little bit of testing for supply below the previous close just in here, and the market is actually reasonably strong considering, and for that reason the market's just popped up towards the end of the week to close as a slight up bar. Now volume increased to average this week, so there was some supply in the market, but I'm thinking that's actually some absorption in preparation for a continuing push higher. If supply is drawn out, you'll see price come back, no doubt, and test this 4,200 level for strength. But the way the market set up this week, and with a little bit of a test for supply last week, I think the market, given any sort of favourable trading conditions, will attempt to move higher again next week in response. You've got a minor level come through there, so that may be another reason that some supply has been drawn out. But given any sort of favourable trading conditions, this market's well placed to continue higher, at least in the near term. You might see a push up towards this 4,400 level. Next chart is the US Treasury 10-year note futures, and we draw some lines in here. Here was the old range, and here is the new range. The price dropped out 3 weeks ago, attempted to recover last week, but drew out some supply, this mid-bar close suggests supply was drawn out. This week, the market's tested for supply. It's moved into consolidation zone around this 112 level, and volume was reduced. So selling pressure appears to have been reduced. So there's less chance price will break down and move lower. If it did, here's the next lower level, around 110. But the reduced volume this week suggests that price is at least going to go sideways and consolidate next week. And if trading conditions were more favourable, there may be a push up towards the highs of the old range, just above the 114 level. So less likely price will move lower, more likely price will move sideways or slightly higher. I expect there will be some resistance at this level, just above the 114. So you can't expect much more than a push up to this level if price does goes well and trading conditions are favourable. Copper price futures. Copper price futures did have an accumulation zone in the background back here. Here was the breakout and the test of the breakout. Price moved up and moved into consolidation just above that level before a secondary breakout. Now here's the highs of the range coming through here. You can see this has caused resistance. Price wasn't strong enough to break above it. There's a minor level through there as well, which sort of caught that high to some degree. Here's the lows of the range, and price attempted to hold on a few times but did eventually break down. The price has broken down. It found some support through here, and here we are at this level now where the market has found some support. There was obviously some buying support come in here, increase in volume. The price dipped lower and then recovered to close back at this level, and next bar up on reduced volume, below average volume, so selling pressure has eased. This week saw a narrow spread up bar on very high volume, which does suggest that some supply is still being drawn out. So I would probably expect price to test for supply early next week, something like this. And if supply continues to be drawn out, I expect price will probably come back and test this level again. It may even shake out. If this bar instead was just absorbing supply, it looks less likely that's the case, but it's possible, then price is positioned to accelerate higher. If price accelerates higher, this is an absorption bar. That's less likely, but it's possible. More likely, supply was drawn out and the market will test for supply at least early next week. If supply is ongoing and persistent and overwhelms price, you may get some sort of shakeout, something more like this. But if it's just a case of some supply being drawn out, the market can go through its motions, absorb that supply next week, and probably end up with a bar something like that. Gold price futures also had an accumulation in the background back here. And here's the breakout. You can see price went through its motions, accelerating higher, drew out some supply there. There's the highs of the range. It forms a zone of supply through here. You can see price pulled back, found support adjacent to this area here where some absorption took place in response to that breakdown line there. Price found support again, pretty much adjacent to where the market did absorb its way higher. And if you bring that line right through, you can see this breakdown line has been quite important. It comes right through. Here was the breakdown. Here was resistance. Price had to absorb supply at that level before it could break higher. Then it's come back, tested this line, and then pushed higher up through this resistance zone above. It's effectively broken out here. Supply has been drawn out with the mid-bar close on the quite high volume. Now price is coming back. It's attempting to absorb the supply being drawn out, and it's testing this breakout above this important zone for strength. If this becomes a successful period of absorption, period of consolidation, you will see price at least attempt to push higher. If this becomes overwhelming, if supply becomes overwhelming at this level, you'll see price pull back even more deeply, and I would expect there'll be considerable buying support adjacent to this level, sort of the 1850-ish level through here. This is where support was previously found. If supply becomes overwhelming and price is pushed out of this zone and back below it again, I would expect considerable buying support to be found back down here, just above the 1800 level. But at the moment, this looks quite favourable. The market's doing a good job. The last two bars have seen lower volume, below average volume. It appears that selling pressure is only modest and reducing, and this leaves the market well placed to push higher given any sort of favourable trading conditions in the future. Silver price futures, similar to copper and gold. There's an accumulation in the background, and price broke out. There was a little period of consolidation before a secondary breakout. The highs of the range come through here, which you can see caused resistance here. And price pulled back in response after a minor breakdown on this bar. The market was able to find support adjacent to the highs of the old accumulation zone, which is exactly where you would expect it to be. And price pushed back up to this level. Here's the highs of the zone, similar to the gold chart. Gold actually moved well above this level, but silver was only able to move up to the highs of the range before moving lower. This was a minor breakdown here, but price has actually done a pretty good job and found support just below this level. So supply reduced. You can see down here that supply reduced as soon as price moved back below the lows of this range, and that's allowed price to gather itself up and push back up to the lows of this resistance zone above. This leaves the market in pretty good position to push higher. Now, you might find a test for supply early next week. You can see down here that volume increased to a little above average. So I would expect this next week early. And then if supply is found to be low, it leaves the market well positioned to push higher if trading conditions become more favourable. And if supply continues to be drawn out early in the week, you may see a deeper and more sustained test for supply, where price comes back a little bit more deeply and challenges the sellers. Like crude price futures, you can see here's the old range here, and price broke down on this bar, and this became a resistance level. There was a secondary breakdown on this bar here. And more recently, price has been trading sideways in a range. There's the lows of the range as it is, and here's the last gasp lows where prices come back before pushing back higher again. So this is the really serious lows of the range. This is the highs at 82.09, and prices have remained in that zone. It's sort of like the sweet spot at the moment, pretty comfortably for a while. It has been a couple of times prices dipped below this level, but for the most part, prices trading between 70 and 82. Supply was drawn out this week, volume increased. Price did attempt to move higher here initially, but supply has been drawn out and prices pushed back to the 70 level. You may find a dip lower next week, more likely in the form of an early test for supply, something like this. And price could become vulnerable if supply continued to be drawn out. So just be aware of that. You may see the lows of this range get tested for strength if supply continues to be drawn out. The market's been pretty resilient. Each time price has pulled back to this level, it's responded pretty quickly higher again. So we'll just have to wait and see. Price did see some supply drawn out this week, so it's likely to test for supply and response next week, at least early in the week. And if trading conditions are found to be favourable and supply is low, then price is likely to respond higher again. Aussie dollar currency futures. You can see back in the past, this is where price broke down through here, below these lows. Since then, there has been a period of consolidation as price moves higher again here. Here was your period of consolidation through there. Price did move higher, but on reducing volumes. You see down here, volumes were reducing as price moved higher, and this wasn't a well-supported push higher. In response, price did come back to these levels here, which is potentially forming the highs of the range that the current price is trading in. And here's the lows of the range. Price dipped below 3 weeks ago, but quickly recovered, and price is back comfortably within this range again. And this sideways range has been going on for quite some time now. It's going to take some serious catalyst to push it out of this. It's going to take a breakout or breakdown in the US dollar, or something more fundamentally happening in the Australian market. But price is comfortably back within this sideways trading range, and I expect it will continue trading between 66 and 68 cents, barring some sort of serious catalyst taking place, either in the US market to change the US dollar, to change the value of the US dollar, or something serious in the Australian market. And this is Bitcoin futures. Bitcoin futures potentially have a accumulation zone in the background. This is probably the most important level on the chart at the moment. You can see price break down here and appeared to move into accumulation mode down here. This was an issue that took place during that time, and the markets just had to deal with that as it occurred. The accumulation went on after a short period of sideways movement. You can see price moved up to the highs of the range in response to that. It's come back. It's tested the highs of this bar on a very high volume, and you can see that volume was much reduced. Price has then accelerated higher and broken out. The next higher level comes through here. Price could have moved away there, but you can see that down here, demand wasn't particularly strong, and that was probably an indication that price would come back and test the breakout for strength, which is what it's doing now. 3 weeks ago, you can see that very high volume was drawn out. This is supply being drawn out, and the market's attempting to absorb that supply right at this point in time. If that supply becomes ongoing and it overwhelms the market, price will drop back more than likely into the relative safety that'll be found adjacent to the previous accumulation zone, which, if I mark it, is sort of like that. There's the accumulation zone, and the supply within that zone has been mostly absorbed. There is very little selling pressure unless fresh selling pressure emerges from some fundamental issue or whatever. If the market is forced back into this zone, there's likely to be reduced supply being drawn out. You'll find that there's some relative safety found in here. If, however, the market is comfortably able to absorb the supply being drawn out in response to the breakout above this accumulation zone, then given reasonable or favourable trading conditions, price will then generally accelerate higher and perform a secondary breakout. And the next higher level comes through here, just above the 30,000 level. So for a summary, the market appears to have broken out from an accumulation zone. It's come back and it's testing the highs of the breakout. around the 25,000 level. The next higher level comes through here, and a push above that level would be a secondary breakout, and the next high level above that is just above the 35,000 level where price broke down over here. If I remove that, and there you go, you can see here was the down bar, price held on, and there's where price broke down from previously, and that's where you'll find supply perhaps emerging from that level. So this is the next higher level to look at. Here's the one below it. Here's the highs of the accumulation zone. So they're the three levels to watch. You can see where we are at the moment. Overwhelming supply will probably push price back adjacent to where price accumulated previously, and favourable trading conditions and successful absorption of supply will likely see a secondary breakout, and that would mean a push probably up around the 35,000 level or just above that. Quickly back to the US dollar index futures. This is the market where it plays a big bearing on many of the other charts in this series. The price is currently up at this important level through here. We'll just have to see what's going on here. Volume was slightly higher this week, but price traded mostly as an inside bar all week, which may account for the below average volume overall, despite it being slightly higher. If this proves to be absorption, and that's what it appears to be right now, any sort of favourable trading conditions will see this market at least attempt to push higher. That'll put pressure on a lot of the other markets that are associated, including the Aussie dollar currency futures and other currency futures. If supply continues to be drawn out at this important level, you'll see price come back. It'll either come back initially to this level or, more importantly, to this level. So they're the two levels to keep an eye on if supply continues to be drawn out. Okay, thanks for your time again. Hopefully that was worth watching. Thanks again. See ya.